Good morning and welcome to the Noble Capital Markets Virtual Equity Conference. I am Joe Gomes, Managing Director and Senior Analyst at Noble Capital. Today I have the pleasure of introducing Comtech, a company I currently cover on the research purpose. Following the presentation, we will have some time for Q&A. Feel free to submit questions using the Submit a Question function. With us today from Comtech is Mike Bondi, CFO, and hopefully John Radigan, interim CEO, will be able to join shortly. With that, I'm going to turn it over to you, Mike. Go ahead.
Thank you, Joe. Hello and good morning, everyone. Welcome to Noble's Consumer Communications, Media, and Technology Virtual Conference held today on June 26th. My name is Michael Bondi, and I am Comtech CFO. Comtech has been around for a while, founded in the late 1960s. Our year end is July 31st. And we just reported our third quarter results just last week on June 18th. Comtech is traded under NASDAQ under the ticker symbol CMTL, and our share price this morning was about $3.30 per share. We have over 1,500 employees globally dispersed and are headquartered in Chandler, Arizona, co-located with our largest high-volume technology manufacturing center here in the U.S. Before we jump into our presentation, I just want to highlight that certain information we'll present today contains forward-looking statements, which are subject to several factors outlined here and in our SEC filings. Our presentation also includes non-GAAP financial measures, which we have outlined and reconciled in our various SEC filings. Accordingly, we strongly urge you to review our cautionary statements regarding forward-looking statements, as well as our reconciliations of GAAP to non-GAAP results included in our SEC filings. With that now behind us, let's dive deeper into Comtech. Okay, John Radigan is our interim CEO. Due to his scheduling and attendance at customer meetings, John's trying to make this meeting, but unfortunately he's not yet able to join. But I'll provide some background on John. John is an accomplished executive who brings over 3 decades of experience and senior leadership expertise across the global satellite technology sector. Before joining Comtech in November of 2023 as the company's first corporate chief development officer, Mr. Radigan served as CEO and president of iDirect Government, as an executive committee member of ST Engineering iDirect. And during his tenure, he grew iDirect Government to over $100 million in annual revenue and spearheaded the acquisition of GlowLink Communications Technologies, Inc., and its unique interference mitigation technologies, which helped the company become the largest provider of time division, multiple access, or TDMA SATCOM capabilities. As for me, I've been with Comtech for over 20 years, serving in various roles, mostly as CFO since October of 2018. There we go. So what does Comtech do? We are a leading communications technology infrastructure company, providing innovative services and solutions to commercial and government customers around the world. We report as one consolidated Comtech, but we do have 2 reportable operating segments. The first is called Satellite and Space Communications, or S&S for short, and the second is called Terrestrial and Wireless Networks, or T&W for short. On the next slide, I'll highlight our key products and services for each of these 2 segments. So on the left side of this slide, we have our Satellite and Space segment, and on the right side of the slide, our T&W segment. Within Satellite and Space, we have a few different product lines. Key business lines include satellite modem and amplifier technologies for satellite ground stations, space components and steerable antennas, next generation beyond line of sight troposcatter solutions, cyber training solutions, and specialized global field support and engineering services. While we make communications and satellites possible, and communications with satellites possible, we don't actually build the satellites or put any components onto the satellites. Our S&S segment accounts for about 60% of our consolidated net sales, And of those sales, about 55% are to U.S. government customers, 15% are to domestic commercial customers, and the rest, about 30%, are to international customers. Within terrestrial and wireless, key business lines include next generation 911 and call delivery services, Solacom call handling solutions. We refer to it as our Guardian call handling solution, and trusted location and messaging applications. Our T&W segment accounts for roughly 40% of our consolidated net sales, and of those sales, 90% are to domestic commercial customers, and about 9% are to international customers, with the rest being U.S. government. Together, our satellite and space segment and our T&W segment, products and services, basically enable flexible, secure, resilient communications for critical life-saving applications. Okay, as mentioned, our fiscal year is on July 31st, and we just reported our Q3 results just last week on the 18th. To give you some context for our relative size of our operations, we've included here on this slide a few KPIs based on our trailing 12 months results, half of which time we were operating under uncertainty relating to our refinancing that we just completed just last week. So consolidated net sales were roughly $563 million. Adjusted EBITDA was $64 million, or roughly 11.4%. Our backlog, which is funded backlog, was about $653 million, and what we call revenue visibility of $1.5 billion. That basically includes our funded backlog of $653 million, plus unfunded portions of contracts that we actually have executed in-house and for which we expect the customer to place orders in the near future. Okay. In terms of recent contract wins, here on this slide, we just highlighted a few key wins over the past 12 or so months. In our satellite and space communications segment, we do a lot of work with the U.S. Army, so you could see that symbol embedded in this slide. We had won about $30 million worth of VSAT equipment orders from the U.S. Army against our GTAX contract. Recently in February and just last week, we announced a stop work order was lifted on a protest of a GFSR contract that we were the winner on. And so that contract is a $544 million contract that we expect to generate revenues over the next 4.5 years. It's basically providing field service support to the U.S. Army globally in remote regions of the world. It's a great contract for us, and we expect to see some uplift to our revenue starting in fiscal 25 from this contract. Also last year, about July of 2023, we just won our first order from the U.S. Army to supply them with next generation troposcatter terminals. That contract is progressing nicely. We're just to that point where we're entering into the period of time where we should be making deliveries against that contract. And we also, in October of 2023, we were awarded a contract that is a very important contract for our modem business. We refer to it as the EDM program. It was basically a $50 million program to develop a next generation modem for the military. And that contract, again, is progressing nicely. Once we complete the development, we do expect this contract to turn into production orders in our future. And just to put some perspective on this, we're replacing a prior Viasat modem. And anecdotally, we've heard, in terms of the number of systems deployed and the value of those systems, that production opportunity could be north of $1 billion over the course of several years. When we get to the T&W segment on the right side of the slide, again, just highlighting a few key wins. We just recently announced a nice win in the state or Commonwealth of Massachusetts. We were providing services to the Commonwealth. That contract was up for renewal starting on August 3rd, and we just announced that we secured a 5-year base year contract with a 5-year option period. Altogether, the value of that contract could exceed $250 million. We also recently had announced in February a renewal, one of our first renewals of an NG911 application in the state of Washington. And also we had in our call routing business, We do business with tier one carriers here in the US like Verizon, where we're helping them route 911 calls. And in October, we had a renewal of about $30 million for that contract. And then also we have a call handling solutions company up in Canada called Solcom. They've developed cutting edge software that sits inside the public safety answering points. And over the course of the past 12 months, we've had bookings at north of $40 million. So nice, strong bookings from that entity. Okay, now moving into what I had referenced earlier, our refinancing. Last week, we were very pleased to announce that we entered into a new $222 million credit facility with a new syndicate of lenders, which replaced our prior credit facility. With a July 31st, 2028 maturity date, we have significantly pushed out our repayment obligations by about 4 years and adding an asset-based revolver component to the facility, and accordingly have significantly enhanced our liquidity. The new credit facility itself consists of a committed $162 million term loan and a $60 million revolver loan facility that's backed by our eligible receivables and inventory. Outstanding borrowings at the time of close approximated $187 million, reflecting $25 million drawn on the revolver. At close, our available sources of liquidity approximated $63 million, consisting of qualified cash and cash equivalents and excess availability under our revolver of about $28 million and $35 million, respectively. Entering this new credit facility was a key milestone for our company, our customers, our vendors, and our dedicated employees who got this over the finish line. We're very pleased to have finally resolved this significant overhang on our business and expect the new credit facility to contribute significantly to enhancing our liquidity and business prospects going forward. Okay, so here on this slide, just to now hone in on what we reported last week for our third quarter consolidated results. Our sales were $128 million. Bookings for the quarter were $101 million. Our gross profit percentage was just over 30%, and our operating loss for the period was $3.5 million. But I would like to point out that during the third quarter of fiscal 24, we incurred about $2.5 million of former CEO transition costs, and also about $2.8 million of restructuring costs as we navigate through our One Comtech transformation. So when you look at that $3.5 million, just to give more context as to what went into that number. Adjusted EBITDA on the bottom line was $11.9 million. So here, more consolidated results, just showing you context relative to prior quarters. When you look at this slide, I won't go through each of the stacks, but when you look at this slide, I would just call out, as we were in the earlier periods, Q3 and Q4 of 23 and going into Q1 of 24, we were, hitting our stride. The One Comtech initiatives were, benefiting our P&L. And then in Q2 and Q3, in each of these charts, we were facing a headwind with respect to uncertainty surrounding our refinancing. And so we've, I think, answered the mail in our fourth quarter by completing the refinancing last week. Okay, now I'll jump into the terrestrial and wireless segment, get a little bit more granular in terms of what they're doing. So terrestrial and wireless, here, as we say, we're expanding our services to multiple customers and markets beyond our core offerings in public safety. So basically, we have the three pillars, platforms within this segment. We basically take a 911 call and we'll route it along for Verizon and other carriers to deliver that call to the public safety answering point with location-based information. We have secured 100% of Verizon's work here in the US, and it's a nice steady revenue stream for us. It's heavily based on software with nice recurring revenues. We also have what's called the Solcom Guardian solution. And as I mentioned, this is providing the public safety answering point first responder with software that they can pull up on their screens to engage with conference calling for, talking with the first responder that's actually being dispatched and also the person in need of help. They can bring up schematics on a screen. They could also see where the caller is in relationship to other calls on a map, and they can do selective routing. And we also have a growing product line, which we refer to as Next Generation 911. And here we're basically helping states and local governments upgrade to the NG 911 core services to allow for not just voice calls, but also text messaging and videos and pictures to be sent on to the first responder as they're dispatching. So this segment, as I mentioned, roughly accounts for 40% of our revenues. And here's some financial information that we just reported on last week. You can see our quarterly revenues are approximately in the $50 million range and starting to uptick again. The growth in this segment right now is being driven by turning on more PSAPs live onto the NG 911 core services. So, nice, again, steady business for us, heavy dose of recurring revenues and heavy dose of software embedded in this solution set. Okay, also just to give you some context for bookings in this segment, when you're looking back at our historical results, we are subject to some lumpiness in the timing of bookings. We often will be tracking very large long-term contracts with states or local governments. And from time to time, they're very hard to predict, but when we do get it, you'll see a spike in the bookings for that particular quarter. And then you may not see a repeat the next quarter because, again, these are multi-year contracts. And so it's not expected to be something that you'd see every quarter. And, as an example, on this slide in Q2 of FY24, that's when we booked the $50 million state of Washington renewal. And that was sort of the cause for the uptick there. What's not on this slide is the Q4 stack. And it doesn't include the booking that we just announced last week with the Commonwealth of Massachusetts, which will significantly contribute to a nice book-to-bill ratio in our fourth quarter. Moving on to satellite and space. Here, as depicted on the slide, there are really three main type of product lines that we're selling to our customers. The first is troposcatter and SATCOM technologies. Basically, troposcatter is a technology that doesn't actually use a satellite or fiber lines to send signals across a long distance. One of our key products is the MTTS system or the Comet terminal that we sell. These are basically beyond line of sight terminals where they're using the atmosphere to bounce a signal off the sky to communicate with the other end of the terminal. It's basically using the sky as a mirror, just like a satellite would. Very secure, hard to jam or blow out of the sky. And so special ops forces really, it's a niche product for special ops forces, both here in the US, but also abroad with NATO allied countries. In terms of our satellite modem and amplifier technologies, Comtech is well known for its single channel per carrier modems that we've been selling for decades with a nice installed base. With the new LEO and MEO satellites being launched, there was a migration to TMT technologies, but I think there's also now been a resurgence in single channel per carrier technologies because of its security and reliability, trying to acquire a satellite moving 17,000 miles per hour in the atmosphere. So very, very well positioned in the technology, cutting edge technology. We've won significant work with the US government where they're standardizing around our platforms. And those contracts are soon to be going into production, which is very nice for us because once we get into production, we can see overhead being absorbed in our factories and improving our margins. The other side of the business deals with space components and antennas. We manufacture 1.2 meter antennas all the way up to 12 meter antennas. These antennas are steerable. They're acquiring satellites that are not geostationary in orbit. And also we put components onto rocket launches. So we're very good at helping our primes, screening parts and figuring out what to buy for each mission as they're launching rockets up into space. We also have as a key customer, as an example, the Japanese Space Agency, which is just like NASA. And quite often they like to track the telemetry of things being launched into space, and we help them providing software and solutions related to those applications. In terms of our financial performance here, again, I think, as I said earlier, you could see we were on a nice steady uptick in the more recent 2 quarters, Q2 and Q3. We did face some headwinds, in particular in our manufacturing sites, as we were managing through the refinancing effort, which provided some liquidity challenges in the second and third quarter. And so at this point in time, with the refinancing now behind us, we have the backlog, we have the ability to pay down supply chain and get the components now in-house so we can manufacture and deliver. So we do expect this trend to turn around now that the refinancing is behind us. I'd also add, recently we had just won that $544 million contract with the Army, and that will give us nice uptick in revenues in FY25. Okay, moving on to our people strategy. As part of our One Comtech transformation, we've been looking to upgrade our talent across the company. And despite all the noise of the refinancing or going concern disclosures that we had leading up in the past couple of quarters, we were successful in attracting and retaining Jeff Robertson, who comes from Intrado. Jeff is running our T&W segment now, and is looking to continue to grow the segment on the top line and also on the bottom line by driving efficiencies into our model. Very recently, he brought on board John Whitehead and Tom Guthrie, 2 known entities as well in the terrestrial and wireless space. Very good operators, and very excited to have them on board working with Jeff. And also, we just brought on board Raleigh Regal, who worked with John Radigan at iDirect and helped grow the company up to that $100 million of government business. Raleigh is very plugged in the government space, and very excited to have him on board as well. He just recently joined. So when we get down to it, and wrapping up now, before concluding our prepared remarks and taking some questions, I'd like to briefly discuss our short-term outlook and make some comments about our longer-term views. Due to the timing of our refinancing last week and only having about 1 month left in our fiscal 24 year, we expect net sales and adjusted EBITDA for our fourth quarter to be similar to our results for the third quarter. And while the refinancing is a great accomplishment and significantly a positive event, for the company, with just 1 month left to go, it's going to take some time to get our supply chain back to an optimal state, which we expect in Q1 of fiscal 25. So having said all that, in terms of our longer range outlook, we do have strong backlog and revenue visibility and are well positioned on very key contracts and programs that we believe will generate nice growth for us in the years ahead. And with that, I want to thank you for your time today and interest in Comtech.
Thanks, Mike. Great presentation. Let's jump right into the Q&A. You recently won some major NG 911 contracts, including a nice announcement this morning. What do you see as your competitive advantage here, and what additional states are you targeting today?
Good question. So yeah, this morning we announced winning work in Texas. It's a NG 911 application, expanding the work that we were doing there. It's a nice, could be all in $30 million type opportunity. With respect to NG 911 and the states that are out there are about 6 states that have yet to propose, out to industry to bid on the work. So that will take some time. But, I think at this point in time, we have about 8 states and 3 local regions throughout the United States. So we have a nice footprint for 911. And, there are certain opportunities that we are tracking. I think we'll have hopefully another one soon to announce with another state. Definitely be, putting some information out there as that progresses. But for us, I think the next step change in the business would be, driving sales into like 988 opportunities. We think that we're well positioned to capture 988 funding as it relates to, these applications. It's extremely similar to what we're doing with 911, and you'd think that a state will not go out and rebuild a whole new application. They'll layer in 988 on top of a 911 system. And so with our footprint, we expect to see, an uptick in revenues from that, and also selling into military bases and tribal nations would be another way to uptick our revenues. We also have, Jeff on board now, who's very exciting to listen to, his understanding of the market. He thinks we have also opportunities to drive additional sales through, AI type applications for the states, upgrading maybe their call handling solutions, and also, helping out with digital recording technologies as they're accumulating a lot of data from all these Internet of Things devices that are capturing emergency calls.
Thanks for that. Let's take one from the audience. At this point, you must have a detailed schedule for billed and unbilled receivables. If so, could you please discuss how you think collections will play out over the balance of the calendar year?
Yeah, another great question. Yeah, we've been tracking a higher level of unbilled receivables over the past 6 to 9 months. It was a function of some very large contracts that we had won. For 2 of those contracts, which they both really relate to our next generation troposcatter solutions, one's to the Army and one's to the Marines. Those contracts are just now moving into production and delivery. And so we should be seeing those unbilled flipping to billed receivables over the summer and being collected in the ensuing months. So yeah, I think we have line of sight to liquidating those unbilled receivables in the short term.
Okay. Another one from the audience. Where does the antenna opportunity for the LEO market stand that you've talked about over the past year or so?
Yeah, the end customer, we're doing various work streams for that end customer. We're at various stages of those contracts. I know they just started releasing production orders. As we had said, we're not the only provider of the solutions for the end customer. And my understanding is they have started to release production orders. So we think in time that, as we progress through our development contracts, we also should see development turn to production. But yeah, nothing to report just yet on it.
Okay. Another one, where do you see your challenges now that you got the refinance done and have a lot of contracts and healthy backlog in place?
I think it's going to come down to execution. Now that we have secured the refinancing and have liquidity to lean into the supply chain, our goal is to get all of our suppliers current, get the suppliers, to prioritize us in their factories and get the production chain to an optimal state. I think that's one of our most short-term objectives right now, is to get things back to where we were as we were coming into the fiscal year. We were showing nice growth on the top and bottom line. We had just started turning our first, operating income in over 2 years. I think now that this is behind us, it's basically working through our backlog and getting through the development and getting to the production side.
Okay. And maybe one last one here on the GFSR contract. Obviously, you mentioned how you've got, removed the stop work order. What can that kind of mean for annualized revenue? What kind of margin contribution can that contract contribute versus the corporate average? Maybe you could talk a little bit more about that.
Sure. In terms of the revenue, as I mentioned, this contract is expected to run over 4.5 years. So you could divide up the contract value by that period of time. Our expectation is that when we get to full ramp rate on the contract, which could happen inside of Q2 timeframe, that contract could yield maybe $30 million on average of revenue a quarter. In terms of its margin profile, we're not building anything for the Army. We're not procuring inventory. We're not building. It's not running through our factories. This is basically staffing positions across the globe for the Army to help them with their IT needs, troubleshooting, our components or other vendor components as it's rolling through the depot. And so here the risk profile is a little bit different than like a manufacturing endeavor. So the margins are more of a 3 to 5% margin because it's cost reimbursable work. Having said all that, we do like the contract because it gives us eyes and ears on what's happening within the Army and where they're being deployed and what they're seeing. It also is a nice contract for us from a cash flow perspective. These are folks that will be charging timesheets effectively, and those timesheets will be aggregated and then billed biweekly and collected within 35 to 45 days. So it should provide a nice steady stream of cash for us.
Okay, let me sneak in one more here from the audience. Just because you mentioned the 988 opportunity, They'd like to know, when do you think you start to see material revenues from the 988 opportunity?
Yeah, our expectation is, the states still have to actually go through an RFP process. So as we've seen with 911, these are lengthy sales cycles. So we're likely to see some RFP activity in FY25, perhaps maybe see an award in FY25. From a revenue contribution perspective, we're not expecting meaningful uplift until, say, FY26.
Okay, great.
Just
That's
given
all
the
the time
timing
we
of
have.
the procurement cycle.
Oh, sorry about that.
It's just saying it's the function of the procurement cycle of the states.
Right, right. Well, that's all the time we have for today, Mike. Really appreciate you guys taking the time. Great presentation, and look forward to continuing to cover Comtech going forward. Thank you.
Thank you very much, Joe. Thank you, everybody.